All right, traders, I am back again with another video. And in this video, I am going to show you how I am looking at trading the New Zealand dollar Swiss franc using Ichimoku. I'm going to add a little bit of the observation theory in there and also the wave analysis theory. So you'll be looking at some wave analysis, some wave theory, and some price observation theory. And I didn't really add too much of the time theory in there, but I am going to show you a trade setup that I'm looking at right now for the New Zealand dollar, and hopefully it helps you to understand how to trade that New Zealand dollar pair where we are right now. So it's coming up right now, so stay tuned. Here we go. All right, traders, so we are now looking at the New Zealand dollar Swiss franc on the daily time frame. I'm going to break this down using Ichimoku Analysis. We're going to look this thing over, see what we got going on, because I see a short opportunity that's developed right now. We really want to look at the structure first, so we're going to look at the daily time frame structure. I'm going to explain what I'm looking at. So basically, I have this level drawn out right here, which was a little bit of a resistance level, as you could see, 1, 2, and then another bounce right here. The market hasn't really come back and really tested that level on the downside, so it hasn't proven to be a support level from this point. I don't know what it was in the past, but it hasn't proven to be a support point from this point. So, but once we return from being resistance, we are now support. But we broke that level, and then we broke back down, and we would look at this level being resistance. Now we broke a little bit above it. So there's some more structure that I want to pay attention to, but also looking at Ichimoku, you could see this flat cloud, big flat cloud right here. Strong support and resistance level. So right now that's a resistance level to us. Previously, when the market was coming down, you could see it was a support level right here, okay? And now it's a resistance level. So that's a level, really pretty much a level of structure here where the market is honoring that flat cloud right there. Now you could see where that happened here, and then you could see where we bounced and we just rejected that point just recently. This last daily candle has rejected that point of structure. And then the last point that I want to make notice of is this level back here. I made this into a zone, so I'm going to get rid of this one, and then I'm going to show you, I'm going to get rid of this line. We don't need that. I made this into a zone right here. This is a point that you want to pay attention to, this level right here. Now, I really was looking for the market to come up into this area, basically from the bottom of the cloud here up into this zone. This zone is at 0.60688 and 0.60404. So we were looking at those levels for at least resistance, and this is the area that I really want to get into the trade. But we got a nice big rejection level that's already rejecting Tinkinson. All right, now Kijinson is becoming flatter, and we got a little bit of distance, so we may still see the market move back a little bit. I'm not going to look at, I'm using the RSI, 9-period RSI down here. And at this point, I don't really see anything with the RSI to make me think like we don't have any divergence or anything like that. But we are staying below this 50 level, okay? So that means we're pretty much, that's where the market is pretty bearish. You could see, you don't even need to look at the market chart to know pretty much what's happening when you're looking at this RSI. When you see it below this level, so when I'm boxing this in right here, I already know that the market's been bearish at this point, right? And then you could see here, you pretty much know you've been bearish right there. When you see that market staying above or below that 50 level, very good level indication. You could see you were bullish here. Right, so basically that you could see that, and you know, you don't really want to be going against that when you're trading. But the most important thing that I'm looking at when I'm trading, I don't want to be going against what Ichimoku is telling me, basically. All right, because I want to follow the direction of Kijinsen. The last main direction was the bearish market. All right, and then it flattened out. It's all right for me to take a short trade off of a flat Kijinsen, but that's if I'm close to that level. When I'm far away and I got a big C clamp, that's a total difference. I don't really want to be going short or long when I have a big C clamp, because the market's more than likely going to retrace back. You could see we have a Kumo twist that developed already. We had a TK crossover bearish that we had a breakout here. Now at that point we had a 3-row reversal breakout right here. All right, so the market broke out to the downside, and then you also had Chiku span breaking below price, but then we broke below the Kumo. We have clear selling below us. All right, so I'm looking for this market to really move, and I'm going to show you where I'm looking for it to go to. But let's do a little bit more analysis as we go back. Let's start from the monthly and go backwards. So you can see I have the zigzag indicator on here because I want to show you what the market is doing structure wise as far as the basic formations. So in Ichimoku, we're looking for the N wave patterns. So you could see this green line here, and I could make it darker, but hopefully you could see that. You could see it's making these N waves. Now this is a big S wave looking pattern here. All right, and then we flattened out here. Started doing little smaller N waves to the downside here. All right, but you can see this is a bearish market totally. And then the second thing about that, on the monthly time frame, looks like we came up to some serious resistance points. Okay, so we're hitting this level. I put the body, and then I'm also going to make it into a zone because I would include this body right here. So if I do that, if I do that, I'm going to move this over, and you could see I have a monthly zone where I would look for the market to move into and then short. Well, it's already developed already here. All right, and the structure has not changed. You could see we have N waves to the downside. So the last N wave was 1, 2, 3, 4, and then the next N wave is developing, which is 1, 2, 3, and then 4. I'm going to do my analysis for my targets on the daily time frame. So we're going to do price observation theory on the daily time frame when we go back. So let's go to the weekly, and you can see the structure of the market with the zigzag on here, and it'll help you to see if you have any like Y waves or P waves or S waves. You could see it a little better with the zigzag on here. I don't leave it on my chart. I like to get it on there to show some analysis. But here you could see right here, the market moved higher in an N wave. Then you had a P wave formation right here, and then the market dropped back down to the downside. So you had N wave structure to the upside, and then I'm going to draw this out for you. Then you had P wave structure right here, basically. All right, and then we broke out. We came back and tested the bottom here of that P wave, and also came up against your Kijinsen, which was also a nice sign. And then the market dropped to the downside. So you saw the structure, the P wave structure, and you knew what the market was doing there. And then it continued its N wave to the downside. Then we had a reversal here pretty much. And then we got a little bit flatter, but still had N waves to the downside. Then we had N waves to the upside. And then we had a small, I'm not sure, but let's go closer to where we are. So from this point, we've been bearish so far. I mean, really, this whole thing is pretty bearish, but just looking here, you could see your N waves to the downside. And then you have basically looking closer to like a S wave, but still looking for that N wave formation, but you got an S wave pattern developing here. And we talk about these waves. I done talked about these waves on previous videos so you can understand a little bit more. So the structure of the market is telling us to the downside. When I look at the market, I don't like to see the market, like these fractals are very important to me. So when I see the market break a fractal, it means a lot to me. But the market's so deep into the downside that I'm going to just stay with it. And then I'm going to show you also I'm using currency strength meter, so I'm going to match it up with the New Zealand dollar Swiss franc and let you see what we got going on there. All right, so I have 3 different types. It all comes in the same package for me. So looking at the New Zealand dollar Swiss franc right here, you could see, so let's break this down. You could see, let's go hourly first. So you could see the Swiss franc on the hourly is much stronger than the New Zealand dollar. New Zealand dollar down here, all right, oversold, might break out and move up to start moving up. Then you see the 4-hour time frame. You could see the big gap here. Now, New Zealand dollar is well below that 2 level, all right. So it's weak. It's been sold off, all right. And then we go to the daily time frame. You can see New Zealand dollar is still very weak, all right, below that -2 level. And then when I go to the weekly, again, it's very weak, all right. And then the monthly, very weak. I mean, they're both pretty far down there, but New Zealand dollar is even weaker. So with that said, let me show you my other indications. So we should be looking for that New Zealand dollar to drop off. I also have this, which is included with the package that I have. So here's the currency strength data. It gives you the average. You could just, I can really look at just this New Zealand dollar Swiss franc. You could see the New Zealand dollar is one of the weakest on all time frames. So it's going to show the red is the weakest of that time frame. So the New Zealand dollar is weak on the 4-hour, daily, monthly, and it's got the lowest average of all. It's one of the weakest of all right now. The Swiss franc is weak on the weekly and strong on these lower time frames, pretty much near what the New Zealand dollar is, but a little bit stronger. All right, so we should see some movement there. And then the last one that I use, they're all the same package, and I don't really use them all, but this is still the currency strength indicator. This one just shows you drawn lines. The other one was drawn lines. This is just bars, and then the other one was the overall data. So it'd be whatever one you want to use. So just go again. We're looking at that New Zealand dollar Swiss franc. We look on that daily time frame. Look how weak that New Zealand dollar is. Very weak. All right, Swiss franc is stronger at least. New Zealand dollar is super weak, so we should be looking for that thing to drop. Okay, so let's go back to the charts. Here we are. So we're looking for that New Zealand dollar to drop. All right, because we've come up. Let's go back to the daily and talk about why. We're looking for it to drop because we've hit this structure levels of resistance, especially this flat cloud here. All right, you got a TK crossover bearish future. There's nothing on this chart that would indicate for me to buy this market at all. All right, so I'm going to stay short. Just the thing is getting into my trade. I had a good rejection here. I want to see what the next couple of days do. It might move me closer to a better entry. If not, we're just going to use the price action to get into the market here. Now, sometime you could go to the 4-hour to get into the market. Now, I don't like to switch Ichimoku and then say go to the 4-hour, because when I do that, when I switch to the 4-hour, what happens is people now see a bullish market, and they see a bullish market based off of Ichimoku, and then they fail to realize what's happening on the bigger time frame. This bigger time frame is what matters. So when if I go to the lower time frame, I usually like to take this off, and then I would be waiting for a short signal here to signify that the market's moving to the downside. But basically, I'm going to just look at this. I'm going to stay right here. All right, so we're looking at this now. A good sign to look at when you're trading here, and actually more so when we're trending. We're starting to trend back to the downside. We moved up, flattened out a little bit. Now we just started to trend back down a little bit. When I'm trending to the downside, I use this RSI. I like to get these 50 bounces off of the RSI, but I'm not just using the RSI to get a 50 bounce. I want to hit the structure of Ichimoku, which will be Tengen-sen or Kijun-sen, before I take the trade. Like when I look at that, so what I'm really looking for is like in this area, just for instance. The market was bearish. We've seen that. It's pretty bearish. And I'm also going to look for divergence. There's a couple things on this chart that really stick out on here. Let me see if I can draw with this. Actually, no, I'll just show you. Right here, and right here. So when I look at those points, let's point them out. This level is higher, and then this level is lower, and then this level is higher. Well, this level right here is this flat level right here, which is higher than this level and this level. But on the chart, this level is higher than this level. These two are pretty close to equal. This one might be a little bit higher. But when you go to this point here, you could see from there to there was moving to the downside, right? Moving to the downside from this point to this point. But on the chart, on the indicator, this moved up. Right? So what is this? Why is that relevant? It's divergence, but it's not regular divergence. It's hidden bearish divergence. Hidden bearish divergence is continuation divergence. When you see continuation divergence, you want to see, I don't want to just trade the divergence. I want to see if I'm up against a resistance level or a support level. In this case, we're up against a resistance level, which is your Kijinsen. All right, you bounced on it and you dropped to the downside. Boom, boom. You never broke that 50 level. You never broke Kijinsen, and you dropped to the downside. So when I'm over here, I'm looking for those types of things. All right. So I want to see this level is higher than this level. And it's pretty much like that right now on the chart. So I don't really have that divergence. Let me see what it looks like exactly. So from there to there, they're pretty even. They shouldn't even be even, okay? But this is higher. This is higher right here. They're pretty even. Now, if this moves up a little bit more, you definitely have hidden bearish divergence, which is basically continuation divergence, which you look for. You bouncing off of resistance levels. So we're looking to short this New Zealand dollar Swiss franc. So now we want to talk about our targets. Where are we going to be going target wise? I'm going to give you the big picture target. All right, because let's give the big picture from here, here, here. That's how you find your targets. So I'm going to put those target levels in for you and then show you what they are. Because when you look at this, we're using Ichimoku observation theory. We just talked about the wave theory when we talk about this wave structure, the N wave and the Y wave and the S wave and the P wave and so forth. The normal market structure, we want to see that N wave developing, that N wave continuing to develop. And that's what we see. We also had an S wave develop here, but we want to see the market moving in N waves. That's what it does most of the time when it's trending up and down. All right, it's going to move N wave up, N wave downs. And those are 3 wave formations. And you'll continuously see those throughout the market on every time frame because the market is fractal by nature. So then the next thing that I'm going to really be looking at is, all right, so we talked about the wave pattern, the wave structure. That helps us to understand where the market is going, which direction we're moving. That structure, that N wave structure, lets me know that the market's moving to the downside or the upside. All right. When I look at the big picture here, I'm looking at this. Now, I do see something that interests me, but overall, the big picture is this: 1, 2, 3, 4. All right. So this would be N wave to the downside. All right. So the next leg you should see moving to the downside. So we measure from, I'm going to put these on your chart where we measure from. We measure from point A, point B, right? And point C. These are going to be the relevant points for us. I thought I did that. So we put this here, make that a C, and then we're going to put one more. We're going to clone that and make that a D. That's going to be a D. So we have A, B equals C, D. We want to find that 1-to-1 ratio. All right. So when what we're looking at is we're going to measure point A, point B, and point C to find point D. And that's how we're using Ichimoku observation theory to find these targets. So I'm going to put these targets on the chart right now. So watch this magic that I do. You're going to blink your eyes, and when you blink your eyes, those levels are going to be on your chart. All right. So get ready to blink. 1, 2, 3, blink. And then magic, boom, there they are right on your chart, those levels. So let's talk about those levels real quick. You probably can't see them all, but we're looking for that D level, which basically the A, B, C, D. We want to look to complete this N wave, because right here you have just a V wave. So we want the market to finish the wave, make a N wave. All right, now we could develop into like a P wave or something, but it doesn't look like that's happening right now. So the continuation of this wave is 2 waves. So you have 1 wave, 2 wave, 3 wave, I wave, V wave, N wave. So we're looking for this N target. I mean this D target. This D target could be at any of these levels we draw on the chart, which could be here where we're looking at. It could be here. It could be here at the V level, or it could be here at the E level. All right. Normally it's going to fall to this N level, which is a 1-to-1 ratio most of the time. Okay. So you may see the market drop to that level. That level will be 50459. Now there's some things happening right here. That level that we drew here, this blue level, is your NT level. You could see the markets failed to get through there a little bit at first, then bounced off, then came and almost started to bounce off of there again. But then it broke through, and we're still looking to see if the market's going to push up a little bit higher and then drop. If that market pushes higher, you're going to also definitely have that divergence we talked about, that hidden bearish divergence. So you will see, you could possibly see this thing honor this resistance level and drop. There's no signs of strength here for this New Zealand dollar to move higher at this point. All right, Swiss franc's been one of the stronger pairs for a little bit, and if you look at this, we're right up against a good resistance point. So we want our trade in this area. We're going to watch for price action. We bounced off of this rejection level here. Want to see what this next day holds. This next day may signify an entry, but with that, it could drop more, and then we're getting farther away from the point where we want our stop loss. So you're going to shoot for your targets down here. I always like to shoot past this target. You got to get past this target for anything to develop. All right. But since this is such a big wick, I always like to draw the body. I want to get past that level, and then I want to draw the wick, bottom of the wick. I need to get past these 2 levels before I start counting these next levels, which would be my N and my V and my E level. But at this point, I want to get through this level right here. All right, so there and here, you need to get through these points. All right, so looking at that, we should see this market long term dropping down through these levels and maybe ending up overall down here at this N level. That's what I'm looking at. All right, how do I get into the trade? Basically, I just told you earlier, price action. Price action will get me into the trade pretty much. I could also wait to see if we push higher, we'll be inside the zone, and I can walk this zone. What I mean by walking the zone is pretty much, if you're at the top of the zone, I put an entry in the middle of the zone. If the market goes up to the middle of the zone, I can put an entry at the bottom of the zone. The zone is the TK zone. Your Kijinsen and your Tenkan-sen, your Tenkan-sen and your Kijinsen. Between those two is a zone. That's going to be a support and resistance zone. That's basically what it is. A support and resistance band, support and resistance zone. This cloud is a support and resistance zone. So you can use that as your support and resistance levels. That's what we do. You want to have your stop loss pretty much above Kijinsen. All right. I like to go above these fractal levels when I start my trade out. The market pretty much honors these levels as it moves lower or higher, pretty much. You could look at past charts and see if you use the upper fractal as a stop loss level, you really won't get stopped out. Or the bottom level as a stop loss level, rarely would you be stopped out in trades. Now the thing is, make sure you're trading the right direction, and then also make sure you can afford that kind of a stop loss. If you can't afford it, that's the main thing, because you got to be able to put that into your overall loss capital of your capital. So you don't want it to be more than 2% of your capital. To me, I don't want to go definitely no more than 3% of my capital as far as a stop loss. Okay, so I put my stop loss based off of how much I can afford, but it also has to be based off of technical levels. It has to be a technical stop loss. So the first thing I figure out, where's the technical stop loss level? Can I afford that technical stop loss level? And then from that point, I place it. If I can't afford it, then maybe I have to cut lot sizes. And then the next thing, I can't take the trade. Okay. So that's what we're looking at with the New Zealand dollar Swiss franc. Let's see what it does for you. Don't worry if it pushes back up. It's going to push up strong against this lower cloud, and you got your Kijinsen level here and this structure level right here where the NT level is. All right. So you got nice, strong structure resistance up above you, and you should be able to see this market continue to stay weak. It's been weak. Let it keep dropping. There goes your trade. All right. So hopefully this helps you. Hopefully it helps you to see how you can enter these markets using Ichimoku and adding some of the concepts in. I didn't use a lot of the time analysis, and I'm not going to go into that right now. I used the wave pretty much in the projection. The price observation theory. So that projected where my target is. The wave allowed me to understand where the structure of the market was, the direction of the market. So the time gives me a date, more than likely, of when I may see the market moves as far as a day of change, which would be Hinkabee. Basically, you're going to see the market move up or down or expand or subtract or whatever. All right. That's day of change. That's what the time analysis will help you to find out, mixed with your wave analysis, which helps you to understand the direction of the market, mixed with your price observation theory, which helps you to find levels and targets of the market where you're going to shoot for the market to move to. And the market can end up on that level on this day with this formation using the observation theory. All of the theories in Ichimoku. Okay. So hopefully this helps you. And that is a live trade, not a live trade, but a trade that I'm looking at getting into soon. So it's not a live trade yet because I didn't get in there yet, but I'm looking to get in there. All right. That rejection is telling me some things already. So I want to see if I can get the best level I can get. All right. And then I'm going to get into the trade, and you'll see me ride that all the way down to this level. And I'll let you know when I clean up that profit. All right. So hope that helped you guys out again. And until next time, guys, have a great one. God bless. So long.